Thanks a lot, Eric. So, actually, just a small side point. Great presentation, the previous one. Some of you may know that I studied computer science at Stanford, although my area was called computational mathematics, not AI. But yeah, I can echo tons of really super talented Vietnamese in the computer science department, the math department in Silicon Valley. I'll have a slide to touch on that in a second. Sorry, can I get the clicker for the slides? Okay, so let me come back to this year, 2024, not the future. And the main thing to know about Vietnam's economy this year, 2024, the main thing that is pumping up the economy this year is an incredible surge in our exports to the US. So Vietnam's exports to the US are up almost 33%, which is an incredible number. And probably will never happen again. It's just the magnitude is so enormous. I was, the only one to predict that we're going to have this big surge in exports a year ago. Although the number, it went up more than I had even expected. Now, what I'm expecting for next year, 2025, is that the whole export story is going to kind of flatten out. I don't think it's going to drop off the cliff. I don't think the US is headed for a big recession, but this kind of soft landing in the US is going to play out, and that is going to be a big drag on the economy here next year. So the question is, if we have this amazing boost to the economy this year from the exports to the US, and that's basically going away next year, what's going to happen next year? What's going to take up the slack? And that's what I'm going to talk about. So basically, we have this little handoff cartoon that we commissioned someone to make. This year, 2024, manufacturing, exports means manufacturing, the same thing. We make stuff here, we sell it to the US. So manufacturing, and to a less extent tourism, are the two main things that are boosting the economy here. So actually, we're still benefiting from this post-COVID reopening boom. It was mainly a story for last year, 2023, but we're still getting some of the benefit from that. However, the reopening boom has almost finished. Like, the number of tourists visiting now is almost back to pre-COVID levels. So these two things are not going to help us next year. By the way, what's missing in this 2024 is what is conspicuously absent is domestic consumption. Domestic consumption in Vietnam this year and also last year has been fairly weak, just kind of flat. Not falling off the cliff, but it's just been kind of bumbling along. If you look at the numbers appear to be healthy, but that's because they're being boosted by tourism. If you strip out tourism, spending by kind of normal local consumers is bumbling along around 2–3%, something like that. Okay, so people don't feel confident, so their spending is not very strong. Now, about next year, 2025, a few things. First of all, the government is making very encouraging noises, giving very encouraging guidance that they're going to ramp up infrastructure spending, and that would be great. That will help the country's long-term future. It will help us to attract FDI. However, more infrastructure spending will not make up for the drop-off in exports. It's just too big. Can't make up for it. The hope that you hear from some people in the government and also some people around is that, well, when there starts to be more infrastructure spending next year, when people see the subway is opening, actually when I walked over here from our office, I saw there was a big gathering of subway workers there getting ready, trained or whatever. When people see that there's progress with the new airport, that's going to make people feel confident to spend. They're going to say, wow, we got a new subway. I want to go out to spend money in the store and go out to dinner. I don't think that's realistic. It's not enough to make people feel encouraged. What I think people will need to feel more confident to spend next year is not only a boost in infrastructure spending, but the government will need to take some steps to unfreeze the real estate market. They've already taken some steps in that direction, kind of half measures. And so what I'm expecting for next year is we could have a situation in which, let's say in Q1, Q2, growth starts to really drop off because of this export story, and then the government sees this and they take decisive action to start to pump up the real estate market. And I'll get into that topic in a second. The real estate market here is fundamentally healthy, and I'll explain a little bit more about that. So this is kind of my overall picture to what to expect next year. And I have a few slides to go a little bit into some of these details. So the export story, our exports surged, flattened out. Now new orders are coming off. New orders were coming off before this big storm that we had recently, so it's not about that. So the outlook for exports to the US next year is not that great, and that's because the US economy is slowing, right? The Fed cut rates by 50 basis points because they can see the slowdown coming. And it turns out that what happens in the US is very, very important for what happens here in Vietnam. This chart shows you that the 3 countries in the world that their fortunes are the most closely connected to the US are Canada and the US, Canada and Mexico. Makes sense because those are the neighbors, right? So US doing well, Canada and Mexico are going to do well. Not doing well, they're both not going to do well. That's just common sense. However, it's amazing that Vietnam, which is all the way on the other side of the world, our fortunes, we're the 3rd most closely connected to what's happening in the US. Sometimes my coworkers will say to me, why are you so focused about the US? Why do you talk about the US so much all the time? Well, it's because, you see, we're very closely connected to what happens in the US. So the US flattening out, again, I don't expect a big recession. We could talk more about that in the Q&A if anyone's interested. But just a flattening out, that by itself will drag the economy down. However, what the good news is that we're already starting to see segments of the real estate market bubbling up. Transaction volume is bouncing, albeit from a low base. There's pockets of enthusiasm here and there. And the real estate market in Vietnam is fundamentally very healthy. Why? Because demand in Vietnam outstrips supply by a factor of 2 to 1. If you look at the number of people getting married every year, the number of people moving to the city, we're not producing nearly enough apartments and housing here. So it's a very different situation than in China. China's problem is they produce so many empty apartments, way, way more than they need. Here we're not producing enough. And it's related to legal and regulatory and zoning issues entailed in getting new projects approved. This is kind of the biggest bottleneck for the real estate market. The market's fundamentally healthy. What it needs is for the government to take action, and I said they put a new land law in place, they've taken some actions, but they need to do more to really get the development activity going again. And I think they will do that. Why do I think they'll do that? Because if they don't, there's going to be a big drop off in GDP growth. So we're going to have 6.5% this year. If they don't do anything, if they just let the manufacturing and the tourism story kind of flatten out, we're going to have a very difficult year next year. And in fact, this year, 2024, if we didn't luck out with this whole US export story, we would have had a pretty difficult year this year. But we got saved by the exports to the US, okay? So I mentioned that they've been making positive noises about infrastructure spending. That's good. That will help a little bit. But what I'm expecting, the upper node there, is I think what's going to happen is when they see the slowdown coming, maybe in Q1, Q2, they're going to take decisive action and start approving a lot more projects, real estate projects. So they'll spend some of their money, own money, on infrastructure. They have the money. That's the good news. Debt to GDP is very low here. And I believe that they'll start approving a lot more infrastructure, a lot more real estate projects. So if you get both of those 2 together will be enough because of the wealth effect for people to feel confident and start spending money again. Now at this point, I want to give a caveat, which is this view that I have, that we have a slowdown, and the government responds to it by doing both of those actions. There's not really a consensus about that. It's kind of 50-50. When I talk to people, in the government, close to the government, think tanks, et cetera, people in the know, about half of the people that I talk to say, yeah, they'll respond really quickly to a slowdown in the economy by unleashing the real estate market, by approving a lot more projects, fixing the zoning problems. And about half of the people that I speak with say, yeah, that's a good theory, but it will probably take a little bit longer for them to get into action. Okay? So I need to let you know that there's kind of a split, that different views on that. The reason that I'm encouraged, and I believe that they will take very decisive action very quickly when they see the slowdown coming. First of all, I've been here 15 years, and I've kind of seen a similar story play out over and over. And the most recent example of a time that the government had something they really had to deal with urgently, and they did deal with it urgently, was this, these are the details on the numbers that I laid out on the slide there. So these numbers here, this is kind of the details of all those numbers. But the more important point that I want to make here is that the last time, most recent example of when there was a problem and they dealt with it very urgently, some of you may know this issue that they had last year where there were electricity shortages in the north of the country, which is where all the manufacturing is. So you really want to make sure that all the FDI factories can have enough electricity and they feel comfortable to set up their factories there. So what the government did to respond to this is they built a new transmission line from the middle of the country, where there's an abundance of electricity, to the north of the country, where it was needed. And the key that you can see on the slide here, there's 3 electricity line projects that I have listed, and this is from EVN's, the government SOE. This is from them. And what they themselves highlighted is that, well, in the past, and the spec of these 3 projects is kind of similar. The capacity, geographic length, nothing's exactly the same, but it's more or less the same type of a project. And in the past, it used to take, you can see 3-4 years to get something like that done, and boom, they're facing this problem with electricity shortage, and they deal with it decisively right away. So when I see this example, that makes me think, okay, if they see a slowdown in GDP growth coming, they have the ability to really move quickly and to take action. So, this slide is not really about the real estate market, but you see the title I put there is, can they act quickly to start really approving a lot more projects? And the answer is yes. And this is a good, not the same, different neighborhood, electricity as opposed to real estate, but it's the same idea that yes, they can take action to really get things going when they have to. There's 2 side stories I want to mention because there's so much in the news, and we get asked about it a lot. China never recovered from COVID, that's the consumer confidence, okay? And I think a lot of people know that the Chinese government took some incremental steps recently to boost their economy. Long story short, the Chinese are basically kind of doing the minimum required to keep their growth at around 5% or so good for them, that's their story. That will help Vietnam somewhat, but what happens in China, even though it's our huge neighbor right there to the north, it's not as important to Vietnam as what you would think, despite the fact that we trade back and forth a lot with them. And the reason for that is that Vietnam has a huge trade deficit with China. So we buy a lot more stuff from them than we sell. So the right way to think about this is that Vietnam is essentially a customer of China, okay? And the US is our customer. So when my customer is in trouble, I have a problem. So I just told you, I think the US economy is not going to collapse next year, but flatten out. And that will mean slower GDP growth for Vietnam. But on the other hand, if the store that I go to, if China is having a problem, well, they might even cut prices. And so that means currency depreciation. So it's not nothing. Certain industries may be affected, steel, fruits, seafood export, different, but on a micro level. But on a macro level, it doesn't really move the needle for Vietnam. So something to keep in the back of your head. Another important topic in the news that people are asking about is the Fed cut interest rates by 50 basis points 2 weeks ago. And they did that because they see the slowdown in the US kind of unfolding. So that kind of confirms everything that I said earlier, that our exports will slow. This is kind of good for Vietnam because lower interest rates in the US will allow us to make interest rates lower here. And it also supports the value of the Vietnam dong. So if you imagine if interest rates were lower here, obviously that's going to be good for the real estate market. And also it would be good for the stock market. Because if you think it through, people only have a few choices of where they can put their money here. They can put it in gold, real estate, stock market, bank deposits. If the bank deposit is less attractive, it's more likely that they'll put money in the stock market. So that would be good for the stock market. But it's not really the main story of what's going on, but it's a plus, just like the China thing is a plus, okay? This is the net summary of everything that I said for my expectation for next year. And what you can see in this chart is that I'm still expecting 6.5% GDP growth next year, and that's because, again, I expect them to respond to a slowdown in exports by pumping up the real estate market and doing infrastructure spending. So you see a big pickup in construction here, but that pickup in construction is not enough to move the needle. And then the other thing you see here is a big pickup in real retail sales, which is basically consumption, and a drop off in manufacturing. So everything that I just outlined. This is the slide that I showed at this conference 1 year ago. So 1 year ago, in this room, I forecast 6.5% GDP growth. At that time, I'm pretty sure I was the very highest out of anyone, and then everyone kind of came up to me after that. And again, this is exactly the slide that I showed last year, and you can see that we were predicting, a big pickup in manufacturing because of the exports to the US. We thought that the infrastructure spending and the real estate this year would be kind of just bumbling along, going sideways, and obviously we completely nailed it. And the reason I'm mentioning that is to give some credibility to the forecast that I just made, that whole tree thing. When we make these forecasts, we think about it really, really carefully, which is why we're usually right. The next chart, so that's the whole story of Vietnam short term, so 2024, 2025. The long-term story in Vietnam is still intact. Nothing has changed. These remain the three kind of key factors that are supporting this amazing outlook for the country's long-term growth. Right now, manufacturing in Vietnam is about 25% of the economy, about a quarter of the economy. All those other Asian tigers, Japan, Taiwan, et cetera, manufacturing in those countries got up to 30, 35% of GDP. So we still have a long way to go for the manufacturing story. The build out of Vietnam's industrial base is being funded by FDI. That's something that the other Asian tigers didn't have. This industrialization of Vietnam gives a lot of employment opportunities, so people can move from the farm to the factory. So that's supporting the emerging middle class. Other factors that support the emerging middle class, the urbanization, people moving to the city. That's also good for the real estate market. Demographics are still very positive in Vietnam. Now, when I've covered this topic before, and I talk about like where the FDI is funding the build out of the manufacturing here, the natural question that might come to your mind is, okay, but what if someday people decide, or companies decide, that they don't want to pour as much FDI into Vietnam? And that's where the third leg of the triangle comes in, the geopolitics and the friendshoring. So we're very good friends with both China and the US. So because of the way that the geopolitical landscape in the world has mapped out, this is a very obvious place that you want to invest. And you can be comfortable that you're not going to have tariffs put on your exports or have any of that kind of stuff to worry about. And I'll show that in a second. So this is a picture of what the story remains. This is the story in words, for those that like words instead of pictures. So we're doing this East Asian development model. Brooke talks about that a lot in his book. We're the only country in the world that's doing the East Asian development model. I actually think the prospects of India are very encouraging for different reasons. India is not doing the East Asian development model, so where you manufacture exports and sell them to the rest of the world. They're not doing that in India. We have a lot more FDI, certainly than India, and also than China ever did. So this is, kind of the last was the picture of the story, and this is the story in words. This is a very interesting chart about geopolitics, and I'll slow down and explain a little bit what this is about. This gray line here on the bottom is the amount of investment in the world, the amount of FDI that flows between countries that are geographically close to each other. So you think about like Germany investing in Poland, which they do because it's right there, it's normal, right? So it's very natural to think that there's going to be a lot of investment that flows between countries that are close to, you can visit the factory easily, et cetera. But the line on the top, the red line, this is the amount of investment in the world that flows between countries that like each other, that have good political relations. I myself was quite surprised the first time I saw this chart, I think from the Brookings Institute. What it shows is that it's more important to have good political relations, even to be physically close together with each other. And that helps explain the slide that I put way at the beginning, where you see like the US is a big influence on Vietnam's economy. So the red line has been going up, and that means that the importance of having good political relations it's been getting even more important as time progresses. And as Don mentioned at the beginning, Vietnam is the only country that both Xi Jinping and Biden visited last year. So we have very good relations with both. We signed this comprehensive strategic partnership with the US. Everybody wants to be Vietnam's friend. So we're doing really well out of the geopolitical landscape. And at the same time, tensions between China and the US are just getting worse and worse. So you see more companies acknowledging that you can't really set up a factory in China and expect that you can, export your products to the US. And speaking of the US, now I come to the next topic that I got asked a lot about these days, which is, how about the election? and you see some stories published where they say, well, if Trump wins, it's going to be bad for Vietnam, blah, blah. No, if Harris wins, it's not going to be bad for Vietnam, blah, 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 blah. And actually, the reality is, from Vietnam's point of view, it doesn't really matter who gets elected. Because as regards trade, as regards the attitude towards China, as regards trying to bring jobs back to the US, they both candidates basically have the same policies now. And those policies, there's a fancy new word for it. It has become to be known the New Washington Consensus. So last year, Jake Sullivan, who's the National Security Advisor, very important person in the Democratic establishment, he gave a speech at the Brookings Institute, and he basically said, he didn't say it in these words, but he basically said, yeah, all that stuff Trump said about China, we kind of want to do that. They said it in a more fancy way, but basically, remember that Biden had criticized Trump's tariffs on China, but then when he came into office, he kept them and actually raised them. So this has become a consensus now of how the US should address China. And so therefore, because of this Washington consensus, I don't think it's not going to matter that much who gets elected for Vietnam, okay? So here you have what they used to call the Washington consensus, was the idea of globalization, free trade agreements, no tariffs, and now the new Washington consensus is tariffs on China, try to bring jobs back to the US, et cetera, et cetera. So both parties kind of pursuing the same set of policies. This is an article from last week, the Foreign Affairs, and you see there again talking about this, the new Washington consensus. The reason that I have this on the screen is because when you see things popping up in Foreign Affairs, when you see things popping up in the Brookings Institute, I showed on the last page the Atlantic magazine, these are the policymakers in Washington, D.C. These are the people, all the big brain guys in the think tanks and whatnot, and they're telling you what their plan is. They're saying, this is what we're going to do. So you have to listen to them when they say that's what they're going to do. When the US-China trade war first broke out, way back, a couple years ago, I think I was the first one that said, no, this is going to be, there was a lot of concern about that, even among some of my own coworkers. And I think I was the first one to say, no, this is going to be good for Vietnam. We're going to benefit from that. And when Biden got elected, there was another set of concerns about, okay, but now that Trump is going to be out and Biden is in, so then it's not going to be good for Vietnam. And what I did that time is I did something very clever. I just read what these Washington elite were saying, and I just copied, I said, well, no, this is what I read, this is what they said. They made a document at that time that was called the Longer Telegram. So the Long Telegram was a document from the Cold War about how the US should respond to the Soviet Union. And the Longer Telegram that was published when Biden was elected specified a whole series of policies about how the US should engage with Vietnam and also Indonesia to a lesser extent. And so basically what I did at that time is I just read what these Washington think tanks were saying, very important, influential people, and I said, okay, well, this is probably what's going to happen, and everything that they said did turn out, because you have to listen to them when they say this is their plan. So it doesn't really matter who gets elected from Vietnam's point of view. Very minor differences between the both of them. They're both talking about they want to get manufacturing back to the US, okay? And that kind of leads into the next thing, is you might say, okay, but if both sides are saying they want to get manufacturing jobs back to the US, so isn't that going to be bad for Vietnam? And the answer is no, because there's simply, after years and years of hollowing out the manufacturing sector in the US, there's certainly not enough workers, and the wages are too high. So, and a good example of that is TSMC, the Taiwanese semiconductor company. They announced at around the same time that they wanted to build a semiconductor fab in Arizona, and also that they want to build a fab in Japan. And long story short, the Japan project is going really well, and the US one, they just haven't been able to hire enough engineers, et cetera, et cetera. So to the extent that some jobs, manufacturing jobs, will move back to the US, it's not going to be the type of things that we produce here. So we're safe for all of that, okay? And speaking of semiconductors, I'm not really in a position, that Don meets the WEF, or we have these really great guys from FPT. I'm not in a position to know about all that level of things, but what I do know is that from firsthand experience, the quality of the talent in this country is outstanding. And of course, the engineer salaries are still considerably lower than our region. People are very enthusiastic about studying. I gave this little side comment when I first came up that there's tons of Vietnamese students in the computer science department at Stanford, at the math department at Stanford. So the raw material is really, really good here. The talent, the quality of people's ability in science and mathematics is outstanding in Vietnam. And so that is getting recognized more and more. You see this article by Nikkei. You see these types of articles more and more, talking about how high quality the STEM pool is: science, technology, engineering, and mathematics. And now I will show a little whimsical slide, which is that I actually have very close firsthand experience of how good people are in mathematics in Vietnam. Because when I first came to Vietnam, I taught in the mathematics department of the National University. That's a much younger me there, teaching a topic that's called stochastic differential equations. And the only thing I will take exception to the previous speaker is that there's a gazillion talented people here. So we need more training, that's for sure. But people are hungry for knowledge, and they're outstanding at math and engineering and science. And I saw that really firsthand. I have an appendix here, which I won't really discuss because I think I talk about this topic, and I want to leave some time for questions. I talk about this topic at almost every one of these conferences, and the summary of this one is basically we've got about another 10 years of good demographics in Vietnam. And anyone that wants to review that slide, I'll be around if you want to ask. And the very last slide I'm going to put up there is before I put the slide up, this is a very, very interesting idea. And I'm going to ask you to think about something before I put the slide up. So right now in Vietnam, the average income is around $4,000, a little bit higher, but let's say the average is around $4,000. So let's say if the average income in Vietnam was to go up 25% over however many years, 3 years, whatever. So if the average income in Vietnam goes up 25%, just think to yourself, what do you think would be the increase in the number of cars that got sold here? Or the number of products that basically upper middle class and middle class people want? Well, it's probably more than 25%. There's probably some kind of leverage type thing. The first time I was asked this, I said, well, it's probably around 50, 75%, something like that. So the idea comes from, I want to give him full credit. This is, there's a French economist, Aftalan is his name, and Louis Gave, who some of you probably know, I used to work with at Paribas, told me this idea. And it's actually, the summary is in the box here, but when average income in an emerging market goes up, there's a surprisingly huge increase in the number of people that are at the upper middle class and the middle class income bracket. So it turns out that the demand for cars, for healthcare, for anything that upper end people want, it goes up dramatically with just a small increase in the average income. This goes through the math. I can go through the details if anyone's interested, but that's the net point. And that's why when you invest in emerging markets, it's very, very important that you focus on this whole middle class story. And that's why it's such a successful investment story, to focus on middle and upper middle class consumption. And again, I could go through the details if anyone's interested, but I want to leave some time for questions because a lot of information. Used to say drinking from a fire hose. So, okay, let's, were there any, yeah. I think your mic is off. Okay.
Okay, thank you. All right. So if the geopolitical situation gets worse in the Middle East, how do you think it will affect Vietnam? And are there particular industries that would do well or do poorly?
I don't think
if you don't know.
I don't think it will affect us that much. Right now, oil, some of you may know, there was record short positions on oil. And basically oil has been trading, for Brent I'm talking, it's been trading at about a 70 to 90 range for a year and a bit or whatever. So the pop in oil prices that we've had is partially because of the China stimulus, partially because of geopolitical, and partially because there were such huge short positions on oil. So let's say inflation in Vietnam would probably be about 1.5 percentage points higher if things really get messy in the Middle East. That would put inflation at, let's call it around 4%. That's not a level that the SBV would really need to respond by raising interest rates. So I don't think there would be a major impact here.
And a second question was, to the extent that there was significant manufacturing and export growth in 2024, what sectors or industries were the major beneficiaries?
So tech exports. Oh, sorry, good, yeah.
And what was the experience, and this is very micro, for the timber product sector, and then the outlook for 25?
Oh, timber is, that's outside my area of expertise. We do have people that are experts in that. But it was all driven by technology. If you look at the, and to be clear, by technology, I mean more like laptops, less smartphones. There's not really attractive new models of smartphones. Smartphone exports are up about 12% right now. High-tech exports are up, call it around 30. And high-tech exports to the US, laptops, et cetera, consumer electronics, are up 40 plus. So part of this whole AI story is people have been buying laptop computers, to upgrading their laptop computers, and we've been a big beneficiary of that in Vietnam. So it's really technology. Anyone want to shout out anything? Or?
Time for one more question.
Yeah.
I said one.
Yeah, right here. Right here.
What are you doing?
Thank you, Michael, for your passionate view on Vietnam, as always. My question is about the new Washington...
Is that a more polite way to make fun of me than what he did?
No. I've been listening to you for so many years.
Okay.
But it's about the new Washington consensus.
Yeah.
It's not just about China and tariffs. It's also about Vietnam and tariff. And there's a lot of implication with inflation in the US, etc.
Right.
So what are your views? Are they going to apply more tariff on Vietnam manufacturing products?
Yeah. Okay.
And so the impact. Thank you.
Okay, so great question. I try to squeeze a lot of topics in these things. So the thing I showed before, the longer telegram, they've made it clear that Vietnam is in the club, okay? What you see sometimes is the possibility that they'll put 10% blanket tariffs on everyone. I think you're referring to these comments by Marco Rubio 2 weeks ago. I'm politically conservative, as everybody in the firm knows. This is a very embarrassing time to be conservative, as Eric always likes to remind me. And Marco Rubio, I don't think people really pay attention to him anymore. So the thing that he was talking about, I don't think there's any possibility that will happen. Vietnam asked to be upgraded to market economy status too early. They shouldn't have done it before the election. That will happen eventually, for sure. And let's say they put 10% blanket tariffs on everyone. Well, then everyone's just back in the same position. So if you got to pay 10% in Thailand, you got to pay 10% here in Vietnam, so you still make the factory here. And this was the same argument about the GMT. People, a year ago, people were still very worried about, oh, the GMT is going to reduce. It didn't happen at all. New projects are up a lot this year. So, but really good question.
All right, so that is a wonderful segue, and I'm kicking you off the stage. That is a wonderful segue to our next discussion. So thank you, Michael.
Okay.